Welcome to TradeTheNBI.com. This is John. This report is for the 22nd of August. The market continues its softness. This is the uncertainty because traders are having to deal with the reality of the narrative that's been sold to them isn't really matching what they are getting in data, and it's confusing to them. So they're not really certain exactly what to do because the Fed has sworn to them that they were going to get inflation. And while they saw it happen with the producer price index to some degree, but then they see manufacturing is starting to skyrocket. So what does that even mean? And is the Fed actually going to make that cut that everyone expects in September? And likely that they will because there's still enough softness in housing and that the interest rates that they have really made an impact there. But is that a horrible thing? One could argue both ways. Yeah, if you want to see an improvement in that category right away, then yeah, of course you want that. But as I've talked about, from a longer term perspective, where rates are at is still historically low. I know people don't want to hear that though. From a reading standpoint, though, you can see we're continuing with the MBI magenta below yellow. Still weak. Still haven't got a MBI white crossover here, and you're still seeing distribution. So not done yet, but we're reaching a point 19 on the DOC here for green. And we're getting very close to an automatic bounce back level that will definitely have to cause a market turnaround. And from an NQ standpoint, likewise similar situation, but now you do see the MBI white take lead over both. But the short-term buyers in the DOC enough to keep it from imploding, but still makes vulnerable the 50% because if you get down there, uh, nothing in this is going to stop that from cascading below. But it's going to be relative to some kind of news event that suggests that there's a reason to be selling, beyond the fact that you have super high valuations and that you're expecting growth levels to be maintained. Yeah, barring that stuff, you do need still an impetus for it, and that would have to be some kind of unexpected conflict or something unique to arise, and we don't have that yet. Congress certainly isn't doing anything, and so you used to have a status quo, which is why Treasuries are stuck in this range as well, even despite all the jawboning. Didn't change the fact everyone's going to be watching oil. And I think, again, my discussion with you about the electricity bifurcation from regular energy prices is going to be the coming story of 26. I think it's just going to really be the struggling factor that they don't have an answer to overcome. Barring some new type of energy coming through, the way they do things now is so inefficient, so slow that you've got zero chance of keeping up with what demand is. And then people are starting to recognize the euro maybe has a problem, and that yeah, it's not the best place to be in because the eurozone wants to continue war, and it's only going to cost them money they don't have, and the U.S. isn't going to be footing that bill anymore, and that becomes problematic for it. And if the Fed governors and stuff start to change, will they support the EU the same way that the U.S. Fed has been propping up the EU? And that's an underlying question that people don't even talk about it at all because it's sort of an underlying expectation they will. But you know, Trump sees the EU as a threat, the same as he sees China and everything else. They're trading partners that are looking to dismantle the U.S. And with the trade agreement that the EU has had to sign, yeah, they're in a world of hurt from a trade standpoint. There, they got reamed. From a gold standpoint, there's nothing that's promoting it. The same with crypto. Nothing to give you an impetus to want to drive into there, other than the growing deficits, which as time goes on, we'll see. It depends on if the U.S.'s growth rate is greater than what the spending is, and that really becomes the true answer. Can you outpace your debt with growth? And that remains to be seen because as of now, that's not the case. ETH supporting better than BTC was. So again, we have that bifurcation where ETH is outperforming. And so we talked about this when we would come up, we would have our secondary run to the zero, which is exactly what happened. We reached 50%, came back to the zero, and then we got magenta starting to rise mid part of the day. Didn't do a whole lot, but that's kind of what you expect. The MBI white then spiked again, but magenta never fading underneath, and that gave enough strength, but you still don't have a shakeout turnaround yet. That's going to build this to where it can gain momentum over that 50% at this particular stage. So may need a little more chop before we finally get a baseline here that will start to improve, and you can see how the options affect that intraday because again, you still have the put call action that's got to get evened out, and the book needs to be finalized. And here you can see the Asian session was pretty much nothing, and then right as the European session was a major dip there, but it's all been bought back up again, so we'll be ready for it. Potentially positive opening coming forward. So we'll see how it plays out, but there's some definite battles going on in between that are really starting to come to the forefront. I think it's all going to start as summer ends. It's going to be an exciting time. As always, learn anything relevant, I'll put it on our team chat. Have a good one. Trade well.